So savings accounts, especially for people under 35. Average savings account for under 35 is $3,240, and it doesn't get better. 55 to 64, $6,400. Yeah, with another 30 years, you have nothing. So, why are Americans doing so bad lately? I mean, you need money to basically enjoy all aspects of life. Not really, but in a way, yes. Yes, you do. So I'm going to tell you the best tool for savings in 2023 and how it can help you make some more money. Okay, so I'm concerned about the American savings culture. And what I mean by that is people are not saving money like they used to. During the Great Depression, well, I mean, we all know what happened in the Great Depression, but people had trouble savings after the Great Depression. And that was because no one trusted the banks anymore, because the banks, in a way, kind of lost a lot of their money. You know, they take their money to the bank, save it, and then they want to pull it out when they want. Well, when, things were getting bad during the Great Depression, they couldn't pull out their money. Banks didn't have the money liquid in order to give it to them. So people would go to the bank and they would turn them down and say, hey, we don't have your money. And people lost so much money. I mean, this is why it was the Great Depression. So it wasn't until 1933 that President Franklin Roosevelt had introduced the FDIC insurance. And FDIC insurance is up to $250,000 for that personal savings account, or that savings account will be insured by the government, meaning if something crazy happens, you at least have your $250,000, which covers most bank accounts in America. And this is what inspired savings accounts to come back to life after the Great Depression, because now people had a reason to trust banks. Everything would be backed up. If worst case scenario, their money would still be protected in their account, and they wouldn't have to worry about coming to nothing. So eventually people started trusting banks again. Let's just check out this chart. This is a personal savings rate chart, meaning the amount of savings per income, basically, the percentage amount for your income. So in the 50s and 60s, we're looking at a 7 to 10% range, which is a pretty decent amount. But then as we continue past 79, we start seeing the rates just drop so much. And this is kind of due to culture in America of just spending everything you have. And now, looking between 2000 and now, the rates are below 5%, which is not good at all. Not good at all, considering inflation is super high and people have small amounts of savings, meaning we could be close to a breaking point, and that's not what we want. But now, to inspire new savings accounts, the Fed has started increasing their federal fund rate. Not necessarily to inspire savings, but a consequence of it increasing interest rates is allowing savings accounts to bear more interest for their holders. So this chart here shows the federal fund rate, and it kind of mimics the same chart as earlier, where in the 50s to 60s, we have interest rates increasing and even topping out at a very, very high level. But this is when savings accounts had more interest, so people had more reason to put their money in savings accounts. As you know, right now or in the past 2 years, that savings accounts have been around like 0.01%, 0.1%, extremely low. Like a good savings account was 0.2% interest rate. And that there's no point of putting your money away if that's just going to stand there and even be below inflation. Like if you can't even get inflation, what's the... So these high rates that we're experiencing now, potentially going up into the 5% range for the fund rate, is going to bring new opportunities. And I'm here to share my favorite opportunity as of January 2023. And it's called the Robinhood Cash Sweep program. The Robinhood is offering a 4% interest rate for holding cash in their account. Now, if we compare it to Chase, Chase is offering, I think, 0.2% for their savings accounts. Now, this is only for gold memberships, but this is a great opportunity. The advantages of the Robinhood Cash Sweep program: you get margin investing at 7%, you get large instant deposits, and you get level 2 market data, along with 4% interest rate for cash. And the disadvantage is it costs $5 a month. Okay, so I'm going to run into the math later, showing you if it makes sense for you. So a couple of quick questions. Are they insured, and will they end up like FTX, as we saw that just collapse, and that was a terrible experience. A lot of people lost money. Yes, they're insured up to $1.5 million per account. Will they end up like FTX? Probably not, but I guess I can't guarantee that. But the accounts are insured. So if you have 1.5 million or less, then it is backed up by the FDIC insurance. And I know you're thinking that FDIC insurance only backs up $250,000. That's per account. So what's cool about this cash sweep program is Robinhood is able to allocate funds to different banks, meaning each bank account they basically put the money in, that has $250,000 per account. So I think they're able to go up to 6 different banks they're working with in order to get you the most insurance possible. And this is a great deal and a great opportunity, as like your Chase account would only have $250,000 for FDIC insurance. So does the interest compound? Yes, it compounds daily at a 4% APY. Will the 4% interest change? It could change based off of the fund rate, because they're just passing off the fund rate to you basically as Robinhood. But the fund rate isn't expected to go down. It's actually expected to go up. So you shouldn't see any changes for at least this year. So what accounts does this make sense for? Because like there's a $5 fee, so you don't want the $5 fee to cost more than your interest made. So I did the math already. It's about $2,500. So if you have over $2,500, you're going to be making more money than the 1.5% interest you get without paying the $5 fee. So if you have over $2,500, it makes sense for the gold fee to get 4% a year on all your cash. And that's a great opportunity. Remember, it's 4% without a lot of risk. You just keep the money in the account. You have access to it at all times. You're not actually buying anything with it. You're just holding it in Robinhood. I think that's a great opportunity. Some competitors would be Chase, paying at 0.2%. Yeah, good deal. Capital One is paying 3.3%. That's closer. Yada Bank, which I'll make a different video on, which is pretty interesting, is paying 2.75% interest. But Robinhood's paying 4%, and I think that's a great deal and something worth checking out. If we really do have a recession coming, we need to be saving money. And if you're saving money, you might as well be making money. So the 4% is a great opportunity, and I think you should check into it. But that's only my opinion.